Hey everyone, for the next few weeks I'm going to focus on the first quarter performance results for various property types. We still face significant policy and economic uncertainty, but the commercial real estate outlook remains sound. This week I'll focus on the first quarter multifamily results and offer some insights into the outlook for this sector. Apartment demand remained strong in the first quarter, with the absorption of more than 145,000 apartment units outpacing the significant volume of 116,000 units completed. As a result, the vacancy rate retreated to 5.0%, its lowest level since the fourth quarter of 2022. It's important to note that apartment construction has been at a record high, delivering over 1 million new apartment units over the last 24 months. So the current pace of absorption is exceptional. There are three forces that have driven this outsized apartment demand. First, the broader economy has been healthy through the first quarter of this year, with low unemployment and steady job creation. Second, the demographics have been positive, with the 73 million strong millennial generation remaining in the rental housing market longer than past generations. At the same time, Gen Z is coming of age, moving out to form new households and supporting rental housing demand. And the third force supporting the strong apartment demand is the affordability gap between renting and purchasing a house. Median home prices remained elevated, just north of $420,000, and the monthly house payment has been compounded by higher mortgage rates. As a result, the monthly payment on a median-priced home is currently about $3,163 per month, well above the national average monthly apartment rent of $1,827. While average rents have increased substantively over the last 5 years, up by about 27%, the payment on a median-priced home has nearly doubled, climbing by about 91% in that same time. That affordability gap and the comparative value of renting as opposed to purchasing a home has helped bolster the national apartment lease renewal rate to 55%, well above the long-term average of 53% over the past 10 years. And that's a dynamic that's unlikely to change in the near future. If mortgage rates were to drop below 6%, for example, it would likely increase the number of people trying to buy a house, and this demand surge, coupled with the slowdown in housing construction, would likely put upward pressure on home prices. The pace of new single-family housing construction fell in March in response to higher construction loan costs, rising material costs under the new tariffs, and rising labor costs as more stringent immigration policies are applied. So the long-term housing shortage will likely remain in place, keeping upward pressure on both single-family home prices and apartment rents. At the same time, the pace of multifamily construction has also begun to taper. Although we expect another 410,000 apartment units to be completed in 2025, the pace of deliveries is expected to fall off quickly. The number of new multifamily starts has fallen to its lowest level since 2011, down 76% from its peak in 2022. So while some markets like Austin, Texas, Charlotte, North Carolina, and Phoenix, Arizona still have a significant completions pipeline coming online in 2025, the national pace of construction is tapering. This is supporting modest but positive rent growth on a national scale. Looking forward, beyond the next year, if tariffs on building materials, especially the anticipated 34% tariff on softwood lumber from Canada, set to take effect in the fall, remain in place, housing construction will remain limited, restraining new supply pressure. Meanwhile, housing demand should remain positive over the longer term. It's important to note, however, that the recent significant decline in consumer sentiment to a reading of 50.8 in April could weigh on household formation in the coming quarters. Historically, when the University of Michigan consumer sentiment reading falls below 60, apartment demand has contracted as household formation slows. Basically, during times of extreme uncertainty and weakening confidence levels, young adults frequently double up or delay moving out on their own. However, once sentiment revives, the pent-up demand tends to release, bolstering multifamily absorption. So these household formations may be delayed by uncertainty and reduce sentiment over the short term, but they will likely ultimately manifest. So, over the longer term, multifamily housing demand should remain robust, and ultimately investing in commercial real estate is a long-term investment, which is why investors always need to keep their eyes on the horizon.